Hey guys, what's going on? CryptoVatsik here with another technical analysis video for you today. As always, nothing of what you're about to see is considered financial advice and they're just my opinions. If you do enjoy this content, I'd really appreciate it if you smash that like button and don't forget to subscribe to the channel for future updates. With that said, let's get into some charts. Okay, for today's video, I'm going to be covering Theta, and it's been about 7 or 8 months since my last video up on this one. So a lot has transpired since that video when we were trading right around here at the time. And I'm just going to bring up a little snippet from that prior video just to give you some context before we get into the current price action that we're looking at now. Okay, here's that prior video, and I'm just going to play it for a second here, and then I'll stop it and we'll just get right back into the chart.
But now we're just kind of in that middle zone of the rally, or the correction of said rally. So maybe in the grand scheme of things, you don't care that much, and buying down here for, 4 years from now type thing, you don't really care that much, even if we do make another low and then it's back up. But I'm more or less just speaking from a trader's perspective at this point.
Okay, so what I had talked about in that video is that we were showing signs of weakness and a correction, and I had marked out my green buy zone, my long-term buy zone in green here in that rectangular box down here, which we at the time only had one really opportunity to buy within that zone. So we'll just flip back to the current chart. Okay, so now looking at that again, we can see clearly that that correction was in fact steeper, and we ended up coming back into my green buy zone, okay? We were unable to hold that critical SR level that I talked about in that prior video, way back here in yellow. Okay, we were unable to hold that level. We lost it. We dumped, came down and swept that prior low with a bearish underside retest of that prior SR level, and then continued the dump. We had a capitulation event here on June 10th, 2023, where we in fact dumped all the way down to the lower end of my buy zone. In other words, the range low. Of course, a decent buyback up to the 100 exponential moving average, the thin gray line here, but clearly consistent resistance above. Came down, had a double bottom, tweezer bottom here on these two long wicks, okay, with actually a third attempt to breach that low over here in October, in which it failed. So we had about 3 or 4 months of time here to buy within my green buy zone, which is the long-term accumulation range, okay? As for the squiggly, I know it's kind of messy. That was just a bit of a impromptu drawing, but as you can see, the theory more or less remained the same, that we did come down to the bottom of the range. We chopped around in it for some time. We had a nice breakout, and now we're testing those prior highs resistance above. But for the sake of this video, I'm going to get rid of that squiggly now. Okay, so what are we looking at now? Well, the idea that we've come out of accumulation and, alts have made their cycle bottom at this point is a strong case backed by, evidence, or at least data on the chart, in which, at least on Theta, we did attempt to breach the range low here 3 times. And then we have now, in fact, made a macro market structure break from these lower highs, lower high, lower high, lower high, and our last lower high here with now a new macro higher high, okay? So we have technically broken out of that bearish market structure. So I think there's a strong case to be made that the bottom is in. However, I do think there's a strong case to be made that we will correct further before pushing to the upside from current market price. And there's a few really important reasons for that, which we'll get into right now. So first off, just looking at this a little bit closer, we can see price really struggling, or at least attempting to reclaim this area of this prior breakdown that really initiated all the way back here. Okay, it was respecting it from these lows at the time, and then as resistance, and then it was an origin of breakdown right here on this bearish consolidation. So as we come up, it's normal that you would see price interact with that level, which clearly we are seeing that right now at this point, okay? When price first interacted with this level, again, since it last did the breakdown over here, it shot right up and had a massive short squeeze to the upside. We then had quite the reverse reaction and low put into the downside, creating quite a large range, okay? And basically the equilibrium of that range falling right on this level that I have marked out. So naturally, as we start to look forward, it's going to be an area that price is either going to bounce off as support or vice versa as resistance. So drilling into the current price action here a little bit closer, okay? We made our swing high. I'm going to take it from the candle closes over here in November 23. And I marked out that level as a critical area of interest, and price respecting it here as resistance. Here is support, here is support, all the way through here is support. So now the logical expectation is that we've lost it unless this candle wicks all the way up and closes above it. But the more realistic scenario is that price will come back up and then reject off of it. And keep in mind, we are on the daily time frame here. So that would be a classic bearish underside retest of that lost SR level, the local SR. Some criteria as to the signs of weakness was, first of all, price was really not able to pressure this prior high that we had here on that wick. We had 1, 2, and 3 wicks failing to breach that high and continue the momentum upwards. So a bit of a double top between this high and the last high, the local high. We also had a a head and shoulders pattern, okay? So first left shoulder here, head here, and then right shoulder over here. Head and shoulder pattern typically is a bearish pattern, unless of course it's an inverse head and shoulder, which is just this, but inverted, of course. This is also known as a swing fail up here. So from this prior high, price was unable to continue the momentum and put in a fresh new high. It had a double top, RSI weakened, and then we dumped. Very much like what we saw here with this prior high, we put in a double top, RSI weakened, we dumped. Of course, as you all know, in an uptrend, you want to see price putting in fresh higher highs and fresh higher lows. Once you start doing that, you start getting signs of weakness. Double top, especially when you get these wicks and you start to see RSI do something like that, where it's on a downtrend showing signs of weakness. The other thing that happened was we had a market structure break. So depending on where you take the trend, at the time, if you are taking your trend, let's just say, for example, here, you're making a low, a higher low, a higher low, and instead of making another higher low, we made a lower low. And then actually with this diagonal here, a really nice bearish underside retest of that diagonal. So first market structure break here on that trend. Then if you said to yourself, okay, this was our next higher low in comparison to this low, so we're going to take it from there, then you would have said to yourself, okay, now we've got a clear market structure break on this lower low in comparison to the prior low. If you're a bit biased, then you might just take your line or your diagonal and you will start to compare it to this low as that macro higher low. But like I said, that's if you have a bullish bias to the upside, much like we had back here. Okay, we have a pretty steep trend here. Okay, from this run up here, we had a market structure break. Well, we had a break of the trend. We did get that market structure break. We put in a lower low. We had a nice dump here on this big red candle, which in fact put in 3 equal pushes down. The first here, the second here, the third here. Commonly, you will see 3 equal pushes down until price then reverses, reclaims a key SR, and then pushes up. So anyways, I don't want to get too sidetracked. Point remains that for the time being, we have had a market structure break. The signs were there. We got our bearish order block and then high time frame here in red, just basically a resistance block that we can drag over. So it lines up nicely with that lost SR here in the horizontal red line. The likely scenario is next we come up to the resistance block and reject off of it back down. The other way that you could look at this actually is really it just comes down to ranges in my opinion. So like I said previously, we had this range put in from this high and this low, okay? So we'll just go ahead and mark that range out from that high. Candle closes down to the low. We've got that. We'll drag it over. And as you can see now, we have come back inside of that range and we have just failed short, just barely, of retesting or tapping the EQ. In my opinion, this is already a retest. That's close enough for me, but retesting that EQ of the range high and the range low. Just like you could have said up here, on this entire wick, that is a range. You have your high and you have your low where the candle closed, or down here, the low at the bottom of the wick. But ultimately, from that high down to that low, we'll take it down to the bottom of the wick even, you've got a range in there. That price ultimately chopped around in here for some time. So, ultimately when price goes higher, you're just into that next range, and it always stems back from prior price action. So if you're stuck and you haven't got anything to work in, take a step back, zoom out, find out where that range is. That's why I've marked out these prior highs up here. It kind of gives you that level to work in. There's a range in here, right here with our high, with our low, EQ somewhere in here. That was that range currently are trading within at this point. So, break out of the range high, target the retest, and ride it up. Vice versa, break the range low, look for the retest, ride it down. All we did when we came back into my green buy zone down here, really when you boil it down, is it's a range that came from this prior area of consolidation that I was highly interested in. And I thought that price had a really good chance of bottoming at, because the next area that I saw it potentially bottoming was, potentially all the way down here, which I didn't think was very reasonable. And I thought this was too optimistic. So looking at price, I marked it out. That's where I had anticipated a bottom. It fell short here, only a minor opportunity. But then of course, here's really, more of a normal accumulation period near the bottom. And even then you could see price really respecting the equilibrium of that range until it was reclaimed. So anyways, that's what I see right now on Theta is we are basically back inside of this range here. Okay, we're trading inside of that range again. So looking to hold the EQ, of course, looking to hold the range low. As I said, for the moment, we do have a market structure break. We are putting in a correction to come out of our accumulation ranges and hold above them. The other thing that I have marked out here is the 618 fibs. It's basically just from the extension of the bottom of the leg to the high. As you know, I like to mark up the 618 fib for perspective, which lines pretty much perfectly with the range high of my accumulation range in green here, okay? So maybe another retest of this prior high over here. You know, as I said, we have that macro market structure break here, putting in a fresh new high, comparison to this lower high. We had retested that previous lower high on this low here, you know, so it's not to say that we can't come down and retest this level again. It's the range low, the current range that we're now trading back inside of. The other thing to keep in mind is we do have the exponential moving 100 exponential moving average here in the thin gray line. So that will start to look like something like this in the coming few days or weeks. So we do have that as support, but you know, time will tell. We have to continuously monitor this. I don't want to predict too far into the future. If we can hold this thick black line here, okay, what does that set at? 96 cents. If we can hold that area, you know, and say we chop around in the upper 50th percent of this range here, you know, meanwhile we hold this 96 cent level, then we start putting in a good chance of reclaiming this next level at just over $1, okay? Reclaim that, and then I'm targeting up here $1.34 as a kind of a take profit one objective, but ultimately next target being up here at $1.70. But you can see it in yellow here. We've really got to maintain this region in here that we are now retesting on the upside, okay? And the other reason why I say that is I'll bring up another indicator that I use. Okay, so I brought it up. You can see it here on the right. It's visible volume range, showing the level of volume interacted at certain price levels. And it also marks out this green dashed line here that you can see, which of course is the peak volume at that price level, which even just by looking at the chart, you can see it perfectly, clearly an area of support or clearly a range of resistance. So, you know, coming up to that, is it expected that we just chop right through it like this? No, the expectations most likely we come up, it rejects us, we correct back down to a prior area of support. You know, maybe it's a 618, maybe it's this prior lower high, maybe it's the range high of the accumulation range, maybe it's the 100 EMA, maybe it's the yellow here that I really want to see hold if you're bullish. This from the point of the breakdown here, and just a level that I think is important if you want to see price continue. Or maybe all those levels fail and we need some more time to, you know, consolidate, accumulate, have a form of re-accumulation off of our initial accumulation down here for us to really then smash through and take it to really macro prior highs. It depends, again, as I said, what the market is ready for as a whole, in my opinion, and not reflective of how good Theta is, so to speak. So really nothing fundamental to do with it. I'm just using technical analysis. There's no fundamental analysis here. Okay, so like I said, you know, it really depends what price is going to do. We are getting to a critical point here. I would like to see yellow hold if we want to push up to our target. Next area of interest, if it's lost and this bearish trend continues, would be down here closer to the 618, closer to the prior range high, and closer to this prior lower high that we've had. So basically a sweep of this prior low of the current leg, which would also be in conjunction a retest of the exponential average, which again I think is perfectly healthy, perfectly natural, but want to see a swift reaction, a swift buyback, and start really putting reclaims in and put pressure on these local highs. But for me personally, dips, you know, cheaper prices are an opportunity for myself. That's my mindset at this point, because I do believe that we've put in our bottom on the majority of, well, I won't say majority, but on the majority of the altcoins that I am looking at. I believe that we've put in our bottom, which means that dips are for buying unless things completely go sideways, which at that point it'll be obvious. So, you know, if you're buying on the way up or if you're trading, use stop losses, use risk management. I think part of the reason why I can speak so freely and stress-free is because a lot of positions were accumulated because I stuck to my plan. You know, I was accumulating, maybe not in the bottoms, okay, but, you know, I could have been purchasing up here, putting in long positions even up here, but overall in the accumulation range. Okay, so when you start zooming out, you start to care less about, you know, if you're 5-10% above or down, because in the grand scheme of things, you know, you're buying in a good area and you're buying for the long term. So I think, you know, wait for those macro corrections, don't get FOMO, wait for a low to be put in, you know, wait for those confirmations, so to speak, and trade safely. All right, guys, thank you very much for joining. I really do appreciate it. If you enjoyed this video, take a moment to smash that like button. And if you want to keep up to date, subscribe to the channel. I'll catch you all next time. Peace.